You're an A-level economics student. You know all the knowledge, you got everything on lock up here, but you just can't seem to put that on paper to an A-star level. You got knowledge, you got content, you got everything sorted, but how do you actually structure an essay to get it to tip-top standards? I got an A-star in my A-level economics exam, and this was my score sheet for my highest paper, macro, paper 2. So what I'm going to do today is I'm going to walk you through my entire essay, how I got a perfect essay, 25 out of 25 in AQA economics, and just what you should be doing to be better in this. So let's get into this. Okay, let's get into it. For my example today, I'm going to be using the 2025 AQA A-Level Macro Paper 2. Sweet. So, first things first, a math question. I'm not going to go answer this in detail today. All I'm going to say is 2 pieces of advice. Firstly, make sure you show you're working out. I know it's repeated all the time, but show you're working out, because then the examiner knows what you're doing. He knows what you're trying to show, essentially. And second thing, and the more crucial thing I'd say, is any units, if it's negative, whatever it is, make sure you display it, make sure you show it. So, not too much detail on question 1. Let's swiftly move to question 2. Question 2 is a 4 marker. So, the question says, explain how the data in extract A, figure 2, shows that Singapore may have benefited from managing its exchange rate compared to Germany and Norway. Before we get into answering the question, how should you answer a 4 marker? Let's get into it. A 4 marker requires really just 4 things. You want a definition. You want 2 data points. And you want a link back. So, this is what I'm going to really zone in now. When I say 2 data points, I mean you select 2 points from the extracts given, mainly just mathematical points, for example, percentages, etc. And then you explain why you have chosen them and why they lead to a comparison. And I'm going to go through this now with my example. So, immediately off the bat, we've got a definition right here. So, an exchange rate refers to the value of one currency measured in terms of another. A fixed managed exchange rate, such as adapted by Singapore, refers to a set value or band for an exchange rate to vary in. Figure 1 illustrates lower levels of inflation for Singapore at 3.3% compared to a 4% inflation rate for Germany and Norway. Straight away, I've got my facts and figures in. And this part is key. This part is incredibly important. This 0.7% difference could be from limited cost push inflation controlled by a managed exchange rate. Why have I chosen that data? What am I thinking when I pick my data? Not allowing the currency to depreciate. Also, growth is much higher at 2.7% compared to Germany at 0.2% and Norway at 1.5%. So that's my information again that I've picked. Second data point. Hence suggesting a managed exchange rate can in fact satisfy the growth objective, i.e. making exports more competitive. I've explained it can satisfy the growth objective. I've explained it can make exports more competitive. Hence, data in figure 2, which is my link back. Hence, data in figure 2 illustrates Singapore benefiting from a fixed exchange rate. I think my definition was slightly weak here, or my link was slightly weak, but I got my 2 data points and my 1 exchange mark. So, this was a 3 out of 4 from the examiner. So, next, question 3. How do we answer a 9 marker? Get back. Guys, very simple. Trust me, 9 markers are your sweet points. You should not be messing up on these. Anywhere from 7 to 9 out of 9, you've done well. 7 to 9 out of 9 would be a level 5 paragraph. And in this essay, I've got an 8 out of 9. So, how do we go about? Definitely definition. This is a given. This goes without saying. Every single time, a definition. Immediately after, point one. What am I trying to say? And the most important thing I'm going to say, keep it to the extract. It should repeat after the extract. If I take out your essay and use that to answer a different essay, you've done something wrong. It needs to be linked to my essay, to the extract. So point one, and this is key, this is a cheat code I'm going to put you on. This means, therefore, this leads to, as a result. It's just a chain of analysis. And trust me, examiners, they love this, chain of analysis. And then obviously a diagram. At the same time, a diagram is key. Using your diagram to explain your argument. Come on, guys. That's just essential. Using your diagram to explain your argument. For a 9 marker specifically, game over. That's just cash. And then you wrap up with your conclusion. So, let's see what I've written here. Appreciation of a currency refers to a higher value of a currency in terms of another, i.e., it takes less of one currency to buy the same amount of goods in another currency. Immediately definition. Okay. And another thing, guys, obviously, the examiner is not going to be silly, right? He knows what appreciation of a currency is. He knows what inflation is. I've got 2 definitions here, in fact. But you have to, this is something my teacher told me, and I really need you guys to keep on this, because trust me, this is one of the best pieces of advice I've ever received in economics. It's that you have to imagine your examiner is a intelligent Martian. So he's going to understand everything you throw at him, but he doesn't know anything from beforehand, if that makes sense. So I've told my examiner this is what it means. I've followed on by saying, i.e., it takes less of one currency to buy the same amount of goods in another currency. Whether this is in the definition or throughout your entirety of your essay, you need to explain that you actually understand what is going on here. So, nevertheless, that's my definition, starting point, sorted. Moving on. Analysts hope that the currency will appreciate soon for Norway. It's just so zoned in into the extract they've given me. You can't take this and put it in a different extract for Cadbury. The entirety of this thing is linked purely to this extract. As the currency appreciates, exports become more expensive as other countries must pay more to receive the same export-based goods. Similarly, imports become more attractive as it is cheaper to import, resulting in an increased importing demand. With this in mind, net exports decreases as exports fall and imports rises. Simple, easy, nice and sweet. Given that, I really like this phrase, use it as much as you can. Given that net exports form a major part of AD. Once again, this part, whenever you mention AD, you mention that. No question about it. AD falls from AD1 to AD2, and as a result, another key phrase, real output contracts from Y1 to Y2, but demand for inflation also falls from P1 to P2, illustrating disinflation. So, I'm basically explaining my diagram. I'm showing what is going on here by this entire section here. And it's just so clean. I'm just speaking smoothly, if that makes sense. Hence, in order to battle Norway's 5.5% inflation, it can be done via an appreciation of something. They've covered me out here. But main thing being, it's smooth. It says stuff. It's just clean in terms of saying what it's supposed to, if that makes sense. So I've got my diagram here. I've explained my diagram. I've got my information. I've got my definition. It just all comes down. And when I say link your paragraphs and link your essays to the extract, I mean any means necessary. For example, if I say Norway, I'm going to probably, if it's Norway or a different currency, say it's talking about India, I'm going to start including stuff like rupees in there. Or something that links to India that I can use that would completely make it unique to India, if that makes sense. Nevertheless, very nice. And we move on to question 4, which is a 25 marker. Here, you can see the question mark. I know you can see the question mark here. But I got a 23 out of 25 on this essay, a high level 5. And before I forget to do it here, I got an 8 out of 9 on this essay. 23 out of 25. What does a 25 marker expect from you? Oh, I love this one. So, 25 marker. Immediately, obviously, we go for an introduction. We've got a definition. We've got some sort of fact. This is why your teachers, your friends are going to try and urge you to read news, etc. because you need this. Trust me, it's going to be nice. Obviously, if you're short on time, you know your timing's slightly weak, you can hone back on this. I'm not going to complain. I'm not going to say anything about that. But this, bonus. Right here, bonus. And you need to show the direction of the essay. Where am I taking this essay? What am I trying to say with my essay today? Immediately after, first point, you give your first point, you explain, you use the chain of analysis that I was speaking about above. So, this means, therefore, as a result, this leads to, etc. And then, you evaluate. And I can't reiterate this enough. I will make a video about this as well. When we evaluate, we're not saying that one thing's good, however, it's bad. We're saying one thing's good, but it could be better because. Or one thing's bad, it can be worse because. It's essentially directly to this first point over here. This first point that you see over here, this evaluation is directly critiquing point 1. It's not a one thing's good and then one thing's bad. No. It's one thing is good. However, this thing can be seen as better or worse, if that makes sense. I'll show you my evaluations and you're going to get an understanding of it. One more thing. When you evaluate, it doesn't always have to be that's good, that's bad, that's good, that's bad. No, it doesn't. If you see my essay coming up in part 2, where I'm going to do inflation, the pairs of essays, I've actually done that's good, that's better. That's bad, that's worse. And this gave me a 25 out of 25 perfect essay. So, before I give you guys too much of a spoiler, let's get back into the question. Oh, and one more thing, conclusion. And with the conclusion, I'm going to write WAGs. Another thing my teacher taught me. Whereas, although, given that, and short term, long term. WAGs needs to be in your conclusion. Needs to be. As soon as you've done one, tick it off. As soon as you've done the other, tick it off, etc. Given that is my favorite as well. That's my best. Alright, let's get into question 4. So, the question asks, Extract C, lines 1 to 2 state, an economy that has seen considerable success by intervening in the foreign exchange market to manage its currency is Singapore. Using the data in the extracts and your knowledge of economics, assess the view that an economy is likely to perform better with a managed exchange rate rather than a freely floating exchange rate. Let's get into it. So, exchange rate measures the value of one currency in terms of another. Bang. Definition already. This is a spoiler right here for you guys. Look at that. Anyway, definition already. It can be fixed, such as Singapore's. I did get a question mark there. I think I might have been wrong over there. Or floating, such as Hong Kong. This essay will have... Okay, you know when you write fast, you do miss out a bit. This essay both exchange rates and evaluate which is more suitable for economic performance, concluding that floating is better, and there is no surprise that almost every country has adopting a floating exchange rate. Guys, no surprise, use that. If there's something that's slightly obvious, like do you want to keep inflation low and stable, it is no surprise that every country has done that. If you want to, for example, this exchange rate thing, it is no surprise that every country has done that. It shows the examiner that you're now linking this to a much more broader perspective. So, firstly, fixed/managed. A fixed exchange rate. Before I do continue, you did notice in my introduction that I said use some sort of fact or figure. I know about my timing. I know I finished by the last second. So, I had to skip out on any sort of information that I had in my introduction, only to make the rest of my points better. And every single paragraph from here on out is a level 5 out of 5, leading to a total score of 23 out of 25. Now let's get into it. Firstly, fixed/managed. A fixed exchange rate refers to an exchange rate that is manipulated to stay within a band or a set value, such as the Chinese yen at 8 yen to $1. Information, banging. Definition, banging. A fixed exchange rate can better control inflation, cost-push inflation. So I've just zoomed in there a tiny bit. In Norway, average CPI inflation in 2023 was 5.5%, with a nominal wage growth at 5.1%, illustrating a falling real wage and falling living standards. This entirety of this information that you're seeing now is just in the extracts. Use it, abuse it. I'm telling you, extracts are gonna save your life. To combat this, a fixed exchange rate, e.g. this SGD, easy one there, can prevent a currency from depreciating as a result. Limit cost-push inflation. Since businesses most usually heavily import raw material, a weaker currency would lead to an increased cost of inflation. But with a fixed exchange rate, cost of production stays stable and the negatives of cost-push inflation are mitigated, hence improving living standards and maintaining international competitiveness, a primary objective of Singapore. So let's go through this. Immediately, definition, we've already spoken about this. I've got my facts and figures all through the extract. I've explained the chain of analysis. So, in Norway, average CPI, 5.5, etc., illustrating a falling real wage, falling living standards. To combat this, fixed exchange rate. I've given an example there as well. It can prevent a currency from depreciating. As a result, it can limit cost-push inflation. Since businesses most usually heavily import raw materials, I'm using real-world knowledge to back this, a weaker currency would lead to an increased cost of production. But with a fixed exchange rate, linking back to what the question is actually asking me, cost of production stays stable and the negatives of cost-push inflation are mitigated. I'm literally talking to the examiner right now. I'm telling him this is the chain of analysis. This is what's going to happen. Hence, improving living standards. As a result, it improves living standards and maintaining international competitiveness. Guys, this is the best part yet. A primary objective of Singapore. Obviously, cheated there a little bit. It is a primary objective of basically every single country out there. But putting this part, I think that's what rounded it off to a level 5 out of 5. Moving on. It could be argued, now this is my evaluation. It could be argued that a floating exchange rate, such as adapted by the UK, can in fact better address the issue. Straight away, it is completely focused on point 1. It's not that floating is good, however, floating is bad. It is fixed is good, however, floating can do better here. So, fixed is good. Floating can do better. This is called an evaluation over here. It could be argued that a floating exchange rate, such as adapted by the UK, can in fact better address this issue. A floating exchange rate is an exchange rate whereby the value is determined by market forces. Bang. Definition. As a result, automatic stabilizers could correct the high levels of inflation, such as 4% in Norway in 2023. Bang. Got my facts and figures right there. Additionally, the free autonomy of interest rates that don't need to be used to manipulate exchange rate can instead be used to better target inflation directly, such as when inflation peaked at 7.5% in October 2022 in Norway. Guys, facts and figures over and overly repeated. And I've got this consistent thing going. So, a floating exchange rate, given that definition. So, why is it good? So, it can correct the high levels of inflation. On top of that, it's completely autonomous, it's free. No one needs to use that to manipulate it or anything. So it can instead be used to target inflation directly. And then I've used that example, such as when inflation peaked. Most importantly, fixed exchange rates, as stated above, when manipulated by interest rates, can lead to a conflict of macroeconomic policies. Examiners love this. In order to depreciate a currency to remain competitive, borrowing and spending may rise, leading to demand-pull inflation, as seen with Singapore in 2023 at 3.3% inflation. Right. One more thing, guys. Key. What type of inflation are we talking about? Demand pull, cost push. You need to make sure you're specifying, staying consistent with that. Hence, finish every sentence with hence. Tell them what you've just argued about. Hence, although fixed exchange rate control cost push inflation, floating can do the same without the risk of macroeconomic conflict, hence suggesting that a floating exchange rate is more suitable for economic performance. Bang. Guys, be honest, does it get better than this? Although fixed exchange rate can control cost push inflation, floating can do the same without the risk of macroeconomic conflict. So in my evaluation, I've said floating is good. It sorts this out. But fixed is good. It sorts this out. But floating can do the same without any issues. It can do the same better. And hence it is better. That is called an evaluation, a direct target on my first point. Hence suggesting that a floating exchange rate is more suitable for economic performance. It could be argued that a floating exchange rate isn't always suitable as it creates volatility in the market, reducing potential investment. One thing you will notice is, it's not one point, however, second point, however, the entirety of my essay flows in a set thing, if that makes sense. It's not a broken piece of writing, of literature. It is a continuous flow of writing, and that is a key thing right there. So I've just spoken about floating, I'm going back into floating. It could be argued that a floating exchange rate isn't always suitable as it creates volatility in the market, reducing potential investment. So I've made my point here. The rational investor would follow a more predictable and profitable investment, but with volatile currencies such as the NOK, investors are unlikely to invest, especially given that, guys, key information here, especially given that over the past 10 years, the krone has fallen over 20% against the euro and the dollar. One thing examiners love to bit is history. So, for example, prior to COVID, interest rates were rock bottom for 15 years, essentially, close to rock bottom. So obviously, following that shock in COVID, it got crazy, if that makes sense. When they increased interest rates, it didn't have as significant as an effect as it was supposed to. So use your history to really emphasize, to really elaborate on the effect of what's trying to happen, if that makes sense. As a result, it can be more difficult in investments such as FTI, and can reduce potential for growth, as it is no surprise, once again, no surprise, that in 2023, Norway grew by 1.5%, whereas Singapore, with a fixed currency, grew by 2.7%, a 1.2% increase. Comparison. Comparison is key. Level 5 paragraph there as well. However, a fixed exchange rate, in that same respect, risks a recession or economic crisis. So what I've done is, so if I just write this in red, I've done floating in my second part. Floating is bad because look what it does. It creates volatility. It's just making investors uncomfortable. Investor. Hold on. It makes the investors uncomfortable. But now I'm saying fixed in that same respect. Not only does it just make investors uncomfortable, it is actually risking a recession, an economic crisis. I'm doubling down on the effect. I'm making the examiner get up and think like, this is a no-brainer. Obviously, I'm going to pick the first option. So, however, a fixed exchange rate in that same respect risks a recession or economic crisis. If a currency is overvalued or pegged at a higher rate than what would reflect its purchasing power parity, it is prone to speculative attacks. Given my point immediately right there. Given my point. Here, investors rush to sell the currency. Now I'm giving what is happening. I'm telling the examiner. Rush to sell the currency or assets held in that currency under panic, leading to rapid reduction in the value of the set currency. Although, part of my wags, this wouldn't hold in the short run, as a currency can be held via currency reserves, over the long run, the currency will depreciate faster after the exhaustion of currency reserves. Set chain of analysis. What is going on? How, although this would happen in the short run, in the long run, what is going on in the economy? Diagram, obviously. And you don't need one diagram per every single point. I used to do that all the time. It's in fact a waste of time, waste of energy. If you start writing your explanations out correctly, you'll be sorted. If you follow the way I'm writing my words, if you follow the way I'm writing my essays, that chain of analysis, essentially, what's going on, one point after another, you will be sorted. As a result, the currency, due to speculative attacks, depreciates as demand falls from D1 to D2, leading to a fall in the currency from P1 to P2, whereby if 0.16 SGD continuous link to extract to the 1 Norwegian krone, it would now take 0.25 SGD to 1 krone. Obviously, that fact is completely made up on the spot. But because I'm using I'm using maths in a sense, but I'm also linking it to that question. It would not directly lead to 0.25 SGD, but I'm showing this is a potential. As currency weakens, it is more expensive to pay debt and confidence falls as purchasing power falls, leading to an increased marginal propensity to save, reducing consumption, and over the long run, creating a recessionary period. So, watch the chain of analysis. Right here, I'm going to point it out. As currency weakens, as that happens, it is more expensive to pay debt. Okay. And confidence falls as purchasing power falls, leading to an increased marginal propensity to save, reducing consumption, and over the long run, I've just lost all my commas, but over the long run, creating a recessionary period. It's just chain after chain after chain after chain, essentially. Hence, an overvalued currency can be prone to speculative attacks, and after exhaustion of a currency reserve, depreciation can lead to an incredibly difficult time to pay debts or reduce will to consume, hence illustrating how heavy research must be implemented before a currency is set or in a band like Singapore. I'm not sure what I wrote there. Sometimes our writing just gets a little bit iffy there. Main thing being the chain of analysis and the hence, guys, the hence. Tell the examiner, sum up what you've just written for him. In conclusion, my conclusion, you guys need to follow the same chain. As always, immediately I'm looking for my wags. In conclusion, I believe a floating exchange rate is most suitable for the best economic performance. So, I've given my point. I've given my judgment, essentially. Judgment. Although a fixed exchange rate can limit cost-push inflation and hold international competitiveness, It could be argued that inflation can be better dealt with when monetary policy is free and not used to manipulate exchange rate, as in floating exchange rates. As per international competitiveness, it could be argued that there is excessive spending of currency reserves to maintain the exchange rate, could instead be spent on directly in subsidies to exporting firms to ease cost of production and boost competitiveness. Hence, I believe a floating exchange rate is most suitable, and is no surprise that almost every country has a floating exchange rate. Okay, I seem to have messed up a tiny bit and not used my WAGs fully, but regardless, the main thing being, I've said what I've said in my essay. I've summed the entirety of that thing in that conclusion right there. I've summed up the entirety essentially. And yeah, if you just have a read of my conclusion, your conclusion should not be that long, maybe half a page or so, roughly the same size as mine. And we move on. What I'll do is I'm going to keep it there, and I'm going to make a part 2 because it's already 30 minutes in. I'm going to make a part 2 where I'm going to go over the next 2 questions where I hit 11 out of 15 and 25 out of 25, and I'm going to show you how a perfect essay looks like. Maybe this time I can get some more WAGs in the conclusion. Alright guys, I'm going to call it there. I hope you guys understand like a foundation behind how to actually write essays and actually deliver your point across, if that makes sense. I'm going to drop a part 2, and then from there you can see how a perfect essay looks like, and you can try, put your thoughts onto paper, if that makes sense. So like, subscribe if you liked, if you enjoyed the video, and we'll get more videos in.